Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, as usual, let's take a look at the gold market. This is the weekly chart of the gold. Yes, we have estimated, or better to say, we have estimated it significantly earlier, but in recent session we have estimated that market has reached this important area. It's a range between the 1150 1170, and yesterday we have discussed the importance of this level. Personally, guys, I call such points or areas as the nodes, so node point. Don't confuse with the Jed-Napoli Fib nodes. This node has some specific features that assumes the minimal potential loss if you would like to take the position here. Better entry point or best entry point, but at the same time the nodes have a very high level of uncertainty, because this is edge point, in fact, the border between the bullish sentiment, bullish potential, and total collapse of this bullish scenario that will turn market to the bearish action. Usually these points I call nodes, and right now market stands at such kind of the node, since, as you can see, if market will break it to the below 1150 and return back in the channel, this is with a high probability will mean further dropping, maybe right to the 1000 even or even lower areas. But if market will keep standing above it, it will keep chances on the upward action. That's why here some destiny should be resolved, determined by the price action, what to expect in the gold market in the nearest future. That's why I called it as a node. Since here, guys, if you will place stop slightly below current level, this will, and since you will take position very close to the crucial point, this will minimize your potential risk. So if you will become wrong, your risk will be minimal compared to any other point where you could take the position. At the same time, if you will become correct, your position will be right at the bottom. I mean, long position. So you will get the best entry point. But yes, this is really great degree of uncertainty, since we do not know what will happen. And we don't have any price action on our back. We don't have any patterns. We don't know what Fed will say today, how it will impact the gold market, and so on. But the point is the same, that market stands at very important area. This is some kind of the border between the bullish perspectives of the market and bearish collapse. So, and probably market hardly will stand here for a very long time. So probably this question should be resolved rather fast. So what will happen? In general, from the technical point of view, as we have said yesterday also, that this deep retracement is not really something outstanding. This is in general the feature of the gold market. First is making the deep retracements. So gold market is typical. And second is retesting of the important broken lines and levels. It's also the feature, the habit of the gold market. That's why with the retracement here is right to the 618 and retesting of this channel, it has been broken up. It's nothing curious, guys. I just forgot to show you this action yesterday that I have promised. So we'll take a look at the daily chart. This was approximately the same. So market has shown the deep retracement of the breakout, the important trend line. The deep retracement was. So take a look at the daily chart. You could see it right here. So as breakout has happened, you could see that the deep retracement was on this way down. This is low. This is of course smaller scale compared to what we have on the weekly chart, but that just shows the habits of the gold markets, how it works. Right now on the daily chart, guys, would not see something really impressive. As we said yesterday, the market mostly stands in the range, as you can see, of Monday session. So Tuesday standing was inside session. Right now is also inside session, but maybe Fed Reserve will bring some more activity on the market and will trigger some action here either to the upside or to the downside. So right now market stands at the important support, as I said, and it's a very crucial area. That's why we need to see what will happen. So upward bounce and some early signs of the reversal could bring starting of the new leg of the bull trend in the gold market, while breakout down will probably lead market to significantly lower levels. Based on the patterns that we see right now, guys, it's in general looks a bit suspicious, because if we assume that the gold market right now is bullish market, usually when the bullish market hits some important supports, the 618 all-time 618 support here is definitely important level. So also some kind of other supports, this ABCD target, so extension, rather strong support here. Also this was never sold on the daily chart. Usually bullish market reacts differently. It forms reversal pattern starting upward action. I would not even talk about this collapse that usually is not typical for the gold market, but we could say that yes, this is probably acceptable, because this is the first upward leg after long-term bearish trend. That's why deep retracement is acceptable. So now the question is, how acceptable is the strength of this plunge? So it's just miserable plunge down. This is another story. But in general, even behavior here looks not really quite bullish, guys. So this is a bit curious action, and that's what is this effect that worries me concerning the perspective of the bullish reversal here. On the 4-hour time frame chart, we also see nothing really interesting. So yes, we see some a bit more flat action. You can see market first stands in a channel. Right now it takes more, let's call it flatter action that lets it to abandon the channel. So it has retested it. Now it stands in flat action. But guys, this is really nothing impressive here. So the market even forms here minor grabbers. So this has happened here. This top has been taken out, market been collapsed. Right now again, minor grabbers has been formed. So this top should be taken out. But what will happen after that, it's difficult to say. All in all, this action, as you can see, doesn't look like some kind of the impulse action, some reversal or something that sort. It's a lot of overlapping candles, long shadows. It mostly looks like gradual downward action, retracements or something of this kind. I did not see here some kind of the reversals or something of that sort. The same on the hourly chart. On the hourly chart, market has completed the butterfly here. So we have discussed this previously. This butterfly has been completed, but what reaction has followed? This is definitely not the reversal action. Yes, this is not definitely the action that is typical for the bullish market. Just some kind of the choppy respect of the target of the butterfly. Nothing really interesting. That's why, guys, I think that based on the current situation that we see here, market doesn't show normal signs of the bullish behavior, bullish market. If we suggest the market is still bullish, it doesn't show the corresponding signs. That is warning sign. That's warning factor. That's why, guys, definitely we should wait for a Fed Reserve meeting today and see what results will it bring. So mostly it will depend on what Fed will say on perspectives on its fiscal policy in 2017. If it will give the hint on the aggressive policy that market mostly anticipated, that will be negative signs. Because I already have explained it once that currently, guys, the inflation only starts to show the signs that's visible to the public, because public mostly tracking the classical statistics that's for the public use, that is bringing by the Bureau of the Statistics on the labor market, on the retail sales and consumption, some price indexes and so on. But Fed probably could get them inflation information from the primary sources, and they may be trying to become the step ahead of the big inflation that could start, because they keep in mind the quantitative easing program. So really huge liquidity had been brought in the market. And they're probably trying to prevent really big spikes in the inflation and so on. That's why, since public doesn't see this, the real inflation rates, they just see that yes, some kind of inflation starting to appear, but Fed already is trying to suffocate it by the aggressive rate hiking. That negative impact on the gold market. So that being said, in the short-term perspective, guys, this market doesn't show any good bullish patterns, and it's really looks not really impressive and fascinating, and price behavior absolutely doesn't let us to take the long position right now. It's better to wait results of the Fed and see what will happen by this result. Mostly the important thing for us is whether the market will be able to hold above the 1150 area.